When you think about how people can buy Bitcoin and pay no taxes on that, explain how that works according to the current tax code.
So what the IRS has built, this is back 30, 40 years ago, is they built what's called a qualified wrapper. Think of it as like a brokerage or a Coinbase account that has this wrapper around it that enables you to not pay short-term capital gains. So when you trade on Coinbase or any of these other exchanges, you have the situation where you're paying income tax, basically, if you're trading within a year. When you're in an IRA or a qualified wrapper, that doesn't exist. You can trade your heart away until you're old, fat, and gray. And you don't pay capital gains on that until way, way, way later. And then you pay a total tax on income once you take it out. So the IRS has built this for us. It's built for hodlers. It's amazing. So it's not just trading, but hodling. You can accumulate and you don't see any taxes until you're old. And if it's a Roth IRA, you don't see any taxes ever. And so we're seeing a nucleus of a cohort of users that are putting dollars into Bitcoin in a Roth IRA. And then when they graduate to that 59 and a half age, they never have to pay taxes on that again. They're living in a Bitcoin circular economy at that point. And they're starting to think about that, where Bitcoin is the actual currency that they're looking at using.
So when I basically have post-tax dollars and I use a Roth IRA, I put those post-tax dollars into my retirement account. I can buy Bitcoin. And regardless if I think I'm a genius day trader or I want to just hold at age 59 and a half, I can begin to take that stuff out and pay no taxes.
Exactly. Also seek your own tax advice, but that's the way that the written rules work right now.
And then in terms of if I don't use a Roth IRA, if I go ahead and I put dollars into my retirement account, I trade, no taxes.
No taxes.
And then the only time I would ever pay taxes in that scenario is at 59 and a half. When I go to take it out, I basically pay taxes at the very end, whatever the amount is that I'm taking out.
Bingo. And by that point, what we see in the U.S. retirement system and like Americans is that you're typically working a little less. Your like salary will go down. So your total income tax will go down. Hopefully, we'll see. But that's the point, is you're building, our users aren't, like, I don't think, when I think of choice, we're third. So you typically don't buy Bitcoin for the first time in your IRA. You typically go down the rabbit hole with GBTC or Coinbase or Kraken or one of these others. You then go, you then learn about it, and then you realize, oh, there's $100,000 sitting in this thing over here that I haven't looked at for years. We want to be second and third. It's a third stack, right? So if you're out there stacking sats every day, this is not necessarily the primary way you got in, but now it's the completion of your financial picture of where you got Bitcoin exposure in that qualified capacity, which is big.
Can people actually contribute Bitcoin into their retirement, or do they have to contribute dollars first?
I'm lobbying on that right now. So right now, the way that the IRS has written this is that you got to do dollars. But here's the good news about that. So to be clear, you have to go dollars into retirement account. You can't go Bitcoin from your Coinbase or whatever account into
your retirement.
Right. But on a stock to flow model, that's really good, because what we're seeing is net fresh new dollars coming in and buying Bitcoin. So it's a positive thing, especially for me as a Bitcoiner that's trying to advance this space. I'm looking at a month, we're getting between $30 to $100 million a month coming in from the legacy retirement system in dollars, and it's going into Bitcoin. And to me, that gets me super excited, because I know that that's 20, 30, 40-year capital from the average Bitcoiner who's like 30-something years old, had a few jobs, et cetera. That's quality.
Are most people trading inside of their retirement accounts, or are they just buying assets and holding them for a long period of time?
Two cohorts. You know, the guys and gals that are holding your own keys, they're not trading. They're here for the long run. The ones that are holding it, Fidelity Digital, they're long-term people. You do see, I trade a little bit. I've traded some in the last few days. You do see some cohort that are doing it because they don't have to pay that short-term capital gains issue that they're getting at all their crypto exchanges. That's good. I don't necessarily fault that. But what our mission is trying to do is, I don't want you day trading your wealth away, right? Even if you may have the ability to do that, and that's great, not all of our users do. I want you building wealth every day. And that's a big reason why we've actually, if you think about our second mission, that's a big reason for what we've done with something called Blinko. We've created this game that literally gives you Bitcoin if you play it every day, and puts a little bit in your pocket towards that long-term savings. So we want people that are thinking about it in a long-term. John, you had a good text this morning in light, especially what's going on. Most of our users that are coming to the market and are coming to us right now aren't thinking about, how do I accumulate Bitcoin so that I can be rich in 2 to 3 years? They're thinking about, how do I accumulate Bitcoins to diversify my long-term wealth over the next 30 years? That's the user we want. And that's who we're getting. And that's the Bitcoiner, really, if you think about it. Most of us, as you know, Anthony, we're not here for a quick like in and out.
Yep.
This is a long-term structural thing where I'm building a better financial future for my son, for our kids, not necessarily just get in and out so that I can go to the beach and hang out more.
And for Joe's dog ranger.
Yeah, exactly.
Yeah,
John, make sure Ranger's included.
For sure. Yeah.